We have the dollar that has come down significantly, even got a retest of that 5 today and still saw that resistance come in. I mean, we have a 10-year yield that has officially made and taken out all the reversal signals in here and ended up making a new low and no cross up for the MACD. But why is it that this run right now looks very fishy to me? And now we're not going to get overly bearish. We're going to see what the signals are saying here. And right now you have two closings above the 9 and the 5 right now, which would say, hey, some positivity could be invited, but always be open to what could go wrong. And I think that's a good thing to say at the beginning of this video. We're going to touch on some other things, and meta is going to be an important note just to keep in your mind. But we have a lot to get into as we touch on some technical analysis, going into those shorter time frames and getting you guys daily expected moves for the SPY and the Qs. Just a quick note, if you want daily expected moves, if you have an expiration for tomorrow, the Patreon link is down in the description. And any stock that we do cover today, or any stock that you do see on the right side of your screen right now, we do have daily expected moves for you for tomorrow, including Amazon with that crazy earnings. So let's get into things. We do notice the obvious rejection on the daily. We're starting to cross back through that signal line on the RSI, and everything looks peachy. We just showed off the dollar. It's not starting to scale up dramatically. We saw that the 10-year yield, it's not starting to scale up dramatically, but we do see some interesting things. As we go into the 30-minute chart, I just want you to see how overall we were making a new high. Even at the end of the day, we made a new high today. But what was HYG doing? HYG is actually dropping off. So high yield growth is actually, the bonds here, high yield growth bonds actually dropping off today, which is very interesting. And what else is going on? Well, the yields didn't see a big reaction, but the housing sector really lost the 5-day again. So these are just very interesting things. These could just be pullbacks that turn back up, but I think it's interesting to pay attention to the fact that we do have some big things to pay attention to for direction, and all of these things did not see that new high that the SPY did. So I think it's worth paying attention to. Now, as we get into the SPY, as we look at what are the most probable things to go on for tomorrow, we're noticing that the 30-minute is trying to do another cross up, right? Maybe trying to get up to this level, these two highs, right? The connection between these two highs. Maybe we're going to head in that upward direction. But it looks like for tomorrow, we do have a daily expected moves of 610.54 to the upside, 602.10 to the downside. Okay, or 610.50. Sorry, it was both 610. It confused me for a sec. This is your 68% zone for the day. It has shrunk up just a little bit. It's still a pretty good range. And so we're going to read into it for a minute, but 68% chance to land within this zone on Friday. That would be tomorrow close, and 32% chance to see something crazy. So according to our weekly expected moves as well, this is a very probable area to end up in, and we're going to just watch out for traps. But as of right now, the 30 minutes curled down. We notice that we're getting that confirmation with the RSI, with the price action. Unless this is some kind of trap and this turns down, well, we haven't crossed up that MACD yet. So if that's able to cross up, I would be paying attention to this area. Once we do get up to these type of areas up here, it will be very important to pull back. We can see a big move to the weekly and pull back and then see that head to the upside. This looks rather bullish, right? We notice that the 30-minute is in a very positive trend. I just don't like this kind of buying structure. I just really don't. It kind of reminds me of this right here, or this right here, or something like that. It even looks weaker than those kinds of moves, right? It's very sideways, very slanted, and it looks like we're just climbing up a cliff. And if this 2-hour just drops back down at any moment and we experience something crazy, hey, you might be heading down pretty quickly, and then we might be curling down the daily chart, which the SPY does have divergence. So these are going to be things to be aware of. If we're going to get a 30-minute pullback even further, we'd pay attention to that downside expected move at around 602. But the main level that we're watching right now, according to the options data, would be like 600, 590 is an important one, 595 is another important one. So I'm just giving you these levels to react to. But if we notice we do have this going on, we have the head. If we react to this level and then we actually experience a big pullback, well, even if that says like, hey, this is crossing down, this is crossing down, we should be aware if that curls back up, because this would be a head and shoulders. And a lot of people are potentially even still calling this some kind of flag at this point, which I don't think they're wrong to say so. It's just a very volatile flag. But we notice that this one had some more choppiness. This one is just a dry run all the way up in the same amount of buying, like just an algorithm's doing it. So this is very fishy to me. But even though it's fishy, I still follow my signals. The 2 hour is pointing up, so bullishness would be the most probable thing. Starting off with the price action we have right now, bullishness would be the most probable thing. And then we're just aware if the 30-minute needs to take that back down, or if the 2 hour crosses, we should be a little bit more on guard and worried and saying, hey, if this crosses down, we're most likely reaching down at least a little bit lower to grab some buyers, if not making some kind of divergence at the lows. And the Qs, we'll notice that we have a daily expected move of 534.37 to the upside and 524.83 to the downside. Once again, 68% zone in here, 32% chance to see something a little bit crazy for the day. So right away, you see the 2 hour, it's pointed up into positive territory. So what's the most likely thing for this to do is the 2 hour to continue. Even if it gets a 30-minute pullback, it would be to continue up to potentially 534.37. Now, this doesn't have some great head and shoulders type look. It looks like a higher low, just barely at this point. So if we're going to head to that upside, hey, that's perfectly fine, right? We're perfectly fine with that. Sorry, we had to load the page for a second. So we're perfectly fine with that. I'm just stating how this would move forward is once you get to these type of levels, it would be good to see that retest of these areas to head higher. That's something I'd be watching for. If we see the 30-minute here, that's where you're most likely going to see that price action, right? If we shoot to the upside, curl back down to retest, and then curl up again, that would be a very bullish thing as well. But we are running into the little trend between the most recent highs, right? Now that we've seen that, maybe we could take it off for a second. I don't really like that on there. But I'll just wanted to show you how that 30-minute, once again, is getting the strong confirmation with the price action, strong confirmation with the RSI. We haven't seen it on the MACD, but the MACD is in such positive territory that even if this pulled back down again to a daily expected move to retest that 5 again and curled back up, that would be an overall positive thing. And that's where you really start to see, after looking at the SPY that popping over the keys, you see how bullishness is the most probable thing. It's just the buying is kind of bad. I really do not. I liked this structure more than I like this right here. This is very seems to me like, just looking at the bars, it seems like, hey, this is very low volume. This seems like just trail up type stuff. It seems like an algorithm that when a sell comes in, it's just going to buy it back up whenever you get even near the 5 at this point. So this is just very interesting. But as of right now, you do see that pointing in the upper direction. So bullishness is the most likely thing. But if this 2 hour does cross down, it would be a reason to react, because we don't have to come down to these areas and see those buyers step in. You know, we're going to be looking for that potential thing to happen. We're going to be looking for that to break through. But if this crosses down, you're going to be most likely, if you end at lower levels, right? If we see something crazy tomorrow, we have data and we have the smallest amount of implied volatility going into tomorrow. Which is very, very interesting, right? Tomorrow, before market open, we will get non-farm payrolls and you'll get the unemployment rate. So those are two very important pieces of data, and that data most likely will move the market in some direction, which means I don't see how or why going into expiration and with some big data drop and with Amazon earnings and others, why do we have such low implied volatility? It's just making me say to myself, okay, if something crazy happens and I need to react, that would be if the 2 hour gets a closing bar below the 5 and the 9 here. IWM is doing the thing, right? We talked about this 229.89 level. We talked about how that is holding as some serious resistance at that point, right? We've had this marked off for a while. But one way that we wanted this to head higher was to carve out a right shoulder over in this area. And it looks like we're doing that as of right now. Now, this doesn't have to be elongated like this one. It doesn't have to make a head and shoulder that ends up failing in it. It could just dip down or be done right now and curl up into positive territory and you see some good stuff. We would want that to remain good throughout for maybe a retest of that area. I don't know what's up with my drawing today. It's just all messing up. Because this level, obviously this level is very important. So wouldn't you love a retest of that if this is going to remain bullish? Because if you flash above this and just lose it right away, it almost looks like a trap. But if you flash above it and then you see it retested and bounce off, you would be pretty happy in saying like, yes, this is going to be a continued positive trend for quite some time. So I just wanted to bring up IWM for a second here before we go into Apple. That's right. We got to go into Apple. Apple still at this moment struggling to get above the 5. Now it was able to barely do it at the end of the day. You can see that 30-minute bar just barely above it. You do have the opportunity for, hey, we're scooping up to here, we're scooping up to here, we're scooping up to here. Now we're tight, but look at this. It does look like hey, we could be seeing some consolidation, some cup and handle to break through and see a good move. But at this moment, you gotta also be paying attention to if the 30-minute does drop. You're still close to the center line. So if you experience a sturdy drop here and you cut out a price of about 230.50, and you see a close below that, we could be crossing down the 2-hour chart again. Now, the 2-hour chart has confirmed up. This means that as the chart stands right now, it looks like it's going to attempt to play out this head and shoulders that we were pointing out, right? We pointed this out down at the lows. Hey, if you take this back, you react up to these levels, you get that right shoulder. This would be the best way for Apple to head higher. And this is all happening, and that's fantastic. But if you want this to really get positive, it's got to go into positive territory as well. And it's taking back the 5. It's doing all the right things. Now you just have to watch if something is going to go wrong. And we do get big data in the morning. We've got Amazon earnings, and we're going to go check that out in a little bit. Tesla, I'm genuinely worried about Tesla, but we have held the tapering, actually. That's very interesting to hold the tapering. And weirdly enough, you look at this RSI, it kind of looks like that GME one. So I don't want to call this a great signal, but you are getting tight. You are seeing that the divergence has been violated here on your MACD. Let me spread that out so you can see how much that has been violated at this point. So it's not really there, but you are still holding 1 point of divergence, the very, very first one. You are still holding that on your RSI. So weirdly enough, Tesla has a chance here, right? As we dip down into 363, but we were pointing at 360 and 357.78 if we were going to get there. If this 2 hour is able to cross up, you would technically still have divergence, but you're further away from the center line. So be watching for rejections in case we need to dig a little bit deeper. Okay, if you go into a 30-minute chart, you're going to see that divergence on the MACD. You're not going to see it on the RSI. So both time frames are showing you divergence on different indicators, and these are not like the best signals in the world, right? We would say, a lot of the time I like to say this, and we say this in the course a lot, right? That we want at least 5 reasons to put a solid chunk of money behind something. Like, that's what I like to do. I like to have multiple reasons to come up with it. And right now I can only really find like 3 for Tesla. If I'm being very diligent with it, I'm really only finding 3 that I truly trust. And at this moment, it just looks like, this is something that could easily fail. So if I do take a play with Tesla going on into Friday, then I would need to make sure to manage risk. And that is going to be a huge thing. I don't think a lot of people would see coming this little dry run up that just spikes down all of a sudden. So we'll see what happens after tomorrow's data. I think like I said at the beginning of the week, something that I'm looking for is what is the direction by the end of the week, and what are the signals looking like at the end of the week? And that's what I'm really going to be paying attention to for tomorrow. Amazon had all the reversal signals, but like we say all the time, I could sit here and gloat and be like, yeah, it had a reversal signal, so it had to drop down. No, earnings is a 50-50 flip. Just because you see the signals there and they called it on the earnings does not mean that this could not have gone in the upward direction. This still could end up in the upward direction by the time this actually opens tomorrow. So just be aware of that. But you did have reversal signals. Take them with a grain of salt, because that E that's down there on your screen. But something interesting here is, what is Amazon doing? What is going to come out for Amazon? I'm going to go look at news potentially tonight to see if Amazon said anything related to tariffs, related to inflation, related to recession, right? Those are the main things I'm looking for that would affect actual, like, the rest of the market. So that's what I wanted to pay attention to. But Amazon, yeah, we're not going to look at this too much. Just if the daily does cross down, now that earnings is over with, if the daily is able to cross, you would be confirming divergence here. Daily charts are something that I do put some more weight behind, even with that E, especially if it does it after. If it's a reaction to the earnings, we still do see the weakness and momentum, and this could be the bad news that Amazon needs to potentially vomit here and end up in the downward direction. What is Amazon telling us if it confirms this divergence tomorrow? That's a big question. Let's just pop right over to Nvidia. Nvidia, once again, we're paying attention to the fact that, hey, look at that. Remember, we had the quick divergence. I'm glad we pointed out the quick divergence on the 2 hour. We're going to look at it in a second. We have not curled up the daily chart, but just note there's a lot of resistances here for Nvidia on the way up. So don't expect this to just be like some grand heavenly ride. I think this will run into bumps along the way, which is a good thing. It shows strength when you go through periods of time where it's like, hey, we ran into a bump in the road. Hey, the buyer still stepped in. That's a very good thing. What you're really watching here is, if this does cross up, though, does it cross back down into negative territory? Is it a lackluster move? We get up to like 130. 535, we go a little bit past it, we get back in this little area here, and then we turn back down. That would be a bad thing, I think, for Nvidia at this point. But let's point out the fact that we have 2-hour divergence, right? We had the 2-hour divergence at the low. We even stated right here, right? This is great, but this could all be a reaction to the 5, and it ended up failing. So I'm glad we mentioned it. And then we just said, watch for a quick divergence on the 2-hour. That's what Nvidia needs to do to save itself. And look at that, the 2-hour divergence on your RSI, very, very clean. 2-hour divergence on your MACD, very, very clean. And we see this taking back the 5. So this is fan-freaking-tastic for Nvidia. But now you're at a point where you might want to see that back off for a second, right? We want to see those little bumps in the road, but we can extend this move and experience those bumps later on as we go up. Something we'll look for over the next few days is if we get some kind of 2-hour divergence here, that would be what we're watching in case the daily chart is going to confirm down. And this is just some kind of trap to get people bullish on Nvidia again. If we don't run into any of those problems, then hey, there is potential for Nvidia to go make a new all-time high. Now we get to Meta, and I really am glad that you're sticking around for this part of the video. Thank you so much for sticking around, and you're someone who's diligent about learning. If you want to get more people interested in learning, please leave a like on this channel. We just want other people to be able to see this stuff. We're trying to really simplify these things and help people make good decisions on the retail side, and that is our goal here, is to just be helpful. Okay, so join the live videos and like these videos. Okay, this right here is interesting. We see a bunch of 2-hour divergence. We've seen these moves. Now, if you're part of Patreon, you know exactly why I'm paying attention right now. And if you've taken the course, you know, right? But if you're part of Patreon, you know exactly why I'm paying attention at this point. We have seen 2 touches now. I'm just going to tell you because we're going into Friday, and I don't want someone to get surprised. This could still end up going in the upward direction. We have not lost the 5. I want to say that first. But right now, what do we do when this thing looks like it's squeezing? Well, we pay attention when that divergence is really close to the center line, really close to the center line, really close to the center line. So in this area, I've started to pay attention. And guess what? We've even gotten 2 tags of a weekly expected move, which tells me what? Well, one, we could just be holding up for Friday and then see another upward move. But also it shows me, hey, there's a reason for a trade here now. This is now another reason. So this is starting to pile up those reasons for Meta. And I think Meta is going to go through some pain very, very soon. I mean, if you look at this daily chart, you look how overbought the MACD and the RSI is, but you look at that RSI and you're going, hey, whenever we get to these type of levels, yeah, sometimes we go a little bit higher, but we do experience some turbulence. And something that would be great for Meta in this move is to see some kind of dip, right? You don't necessarily want to see this thing just going and going and going forever. You want to see that flow in it so you can reach down and grab those buyers and remain healthy on the way up. This is not necessarily doing that. So now we have the opportunity for a big drop for Meta. Now I'm paying attention to 660, right? Or wherever that 20 is. And then I'm also looking for something like 630, right? 630 looks like a great retest level. So that's what I'll be paying attention to for Meta. But I really wanted to point this out. If Meta, let's just say Meta ends up going down here. What if Meta actually pulls back? But why does it pull back? Does money from Meta get out of Meta and go into Nvidia, or does everything start to drop at the same time at lower levels, right? If Nvidia experiences a drop from here, it's going to go to like lower prices, right? So we are overall just interested in what Meta is saying here. Is it telling us like, hey, yeah, I need a pullback, but other things are going to hold up the market? Because Meta right now is a big, big stock that is holding up the market really, really well, right? If Meta was going down like everything else, this market would be a lot lower. Okay, so let's just keep it in mind, and we're going to pay attention to these things as we move along throughout next week. AMC, we're still seeing if that 2-hour divergence is holding. It is holding at this point. You're seeing the 30-minute get a little dip down here, right? We're dipping down, dipping down, dipping down to the point where we're going negative, right? We're negative at this point, and that's not a good thing. We've lost the 5 again. That's not a good thing. So if you want to hold that signal, you don't really want to take these lows out. You want to see a curl up on Friday. If we're going to get a big move on Monday from AMC or GME, you usually do want to see something decent on Friday, but nothing too crazy. So I just wanted to point that out. The daily chart did curl up today, but on a negative bar below the 9. So this is not a good confirmation for the MACD at this point, and I just wanted you to be aware of that for the time being. As we go over to GME, this is where I think it's interesting because GME is down by a weekly expected move. GME is at the 200-day moving average, and you haven't tested that. You really haven't tested that at all. But just so you know, the 200, it's overall a line that's tracking the price action, right? It's tracking the price action, but the 200 itself isn't support. The 200 itself isn't. It's will buyers step in at the 200 that makes it a support. Okay, you have to see reactions from the 200 first to understand that it's not just a white line on your screen that's magical and it's going to just go up whenever it touches that line. You have to understand sellers could sell potentially lower through that level. Buyers step in. This would be a great area for that to happen. And you do still have that little 2-hour, I think it's actually a 30-minute signal now. You do still have the 30-minute signals here popping up down here on the MACD. You do see that, but this doesn't necessarily say some kind of big turnaround is going to come. So I would be very interested if this turned around with it, but you do have divergence on your RSI, on your MACD at the same time. And this is a good way to attempt to take back the 5, but we've seen that 2-hour chart and how deep that MACD is. So if that just rejects, you can see another week of pain and end up at lower prices than this, and maybe we need a 2-hour divergence before we head to the upside. The recipe for success here is, hey, you got to see the daily curled up and positive, you got to see the 2-hour curled up and positive, you got to see the 30-minute curled up and positive or with divergence, and you don't have that recipe right now. You just don't, and that's why you probably didn't end up at the top side move. You're actually, if you didn't know, you're at that weekly expected move downside right now. So the options market is saying this is as low as GME is supposed to go, and we'll see what happens by the close on Friday. But this has 68% chance to see this maybe remain in these areas or bounce, and a 32% chance to close outside of that level by Friday close. So we do have daily expected moves for this as well, but this is just something we're always cautious with it. We're just looking for, hey, do we still see things dropping? And the answer right now is yes, you do. You have not seen these confidently take back those 5-day moving averages. Just wanted to mention was gold. Now, are we seeing something interesting because of the yen carry trade at this point? I mean, are we seeing weakness in the dollar and weakness in the 10-year? Because I said with the yen carry trade that was going on, the JPY rising, you know, we're going to really struggle if we have to raise rates, right? We had Japan raise rates. They've been artificially potentially holding us up for a long time with all the carry trade that's going on. And then we also have hey, if we increase yields as well, that would be even more pressure, and it really would lean towards like almost immediate recession at that point. So I think it makes sense that the yields are dropping, but I'm really interested in paying attention to GLD because this is a major upward move. We're seeing it continue. We're seeing it hold to 5. It looks like it's going to continue, but why is the dollar going to really collapse here? And does it have to do with the yen carry trade at this point? So we'll be paying attention to that. We'll be seeing what's happening because they do have to transfer that into USD. So it will be interesting to see how it plays out, and we'll try to keep our ear to the ground on that one. Now, at the end of the video here, I just wanted to talk about volatility, right? Volatility. Now, you guys think that I just make up some random lines, but at the same time, what did we end up tagging today, right? We got a reaction off my first one at 1683. I would put these on your charts. I've looked at them in the past and seen big reactions from here, right? You see the gap above this one, see the gap above that. It's great stuff. See how we get a reaction right around 1683? It's great stuff. See how we get a reaction from 1504? See how we get a reaction from 1683? See how we're now getting that to wick up at 1504. So the 2-hour crosses up here. We can see a moment of volatility. Just understand that you are overall coiling up. Okay, so this could be a lackluster move that then sees another push lower. And we'll see if that's able to fully break through and go down to 1212. That's one. But if we make a 2-hour divergence right here, I'd probably be watching out because that likes to turn up daily charts. Okay, so 2-hour turns up, you got to be aware that some form of volatility can come in and see if that's failing, and then notice if there's a divergence. Now, at this moment, does the 2-hour have a good shot to curl up? I would say yes. I would actually say yes. Now, these aren't the best divergences in the world. They really aren't. I'm going to be honest with you. This one's not even here. The ones across on your RSI have been violated, right? We've seen the violation of those a few times now with these dips down. So what do you have? Well, you have a divergence in the very, very near price action from these lows, very flat and then slightly up here at the end. That wick helped you out. That's almost not even going to be considered divergence because it's by the closing bar and that's higher than this point. But overall, you see this is going to make an attempt to probably take back the 5. So if we're able to take back the 5, you might see that 2-hour cross up and we could see volatility right away. So we see how all of our indicators on a lot of charts are pointing in that upward direction, but at the same time you see this little thing from volatility. At the same time you see, wow, Meta really looks like it needs a pretty deep corrective move here. And then you're looking at other stocks that are at lower levels. So what is going to go on here? And a lot of that will depend on data in the morning. Thank you guys so much for watching this video. I really appreciate it. I'm sorry that I will not be live tomorrow, but we got to take care of wifey. It's her birthday, and I'm very, very happy she was born, aren't you? Because I might not even be here if she wasn't born. She was a big reason that I even started this channel in the first place, and I can't thank her enough for that. So I'm going to make sure to treat her well, and thank you, Richard, for giving us that little donation so that we could maybe do something a little bit even more fun, right? She's a food snob, so maybe I'll take her to a nice dinner. But thank you guys so much. Like, truly, when you guys are, you know, saying happy birthday and you know, saying sorry that we had to, you know, send our dog away and do all the, it really makes me feel like this is a true community at this point. And I think we really do see that connection between all of us. And I think that's awesome. And at the end of the day, we should hold each other accountable. We should hold ourselves accountable, and we should trade like water in this type of environment, right? We need to be trading like water. We need to understand the risks when we're in a move, and we need to understand the rewards when we're in a move as well. And I think that's a great thing to say at the end of this video. So thank you so much for being a part of this community. Thank you for liking, subscribing, doing all the things that you guys always do. And I will see you guys next time on Sunday when we give out new weekly expected moves. Thank you. Have a great evening. Good luck with your trades tomorrow, and always make sure to trade like water. Peace out.